Hello traders, Todd Brown here from the Trading Authority. I'm a trading mentor, and we are coming at you today for the first in a 5-part series where we're going to debunk some of the 5 myths of trading. All right, and one of the first ones that we want to talk about today is the fact that patterns just don't work. Okay, patterns absolutely work. In fact, the beautiful part about patterns is they work in all time frames, in all market conditions. One of the things I want you to consider is that when you are looking at trading patterns, one of the things that I teach constantly to traders is master a signal, and then you can diversify across and apply it to multiple markets. Okay, so if you master a signal, or in this case master a pattern, then you can go look for that pattern or the evidence of that pattern presenting itself in any time frame in any market. So the first thing that we'll talk about is a wedge pattern. An ascending wedge typically leads into double tops. We're looking for turning point patterns, places where we feel like the market might hit a point of exhaustion, regardless of the directional price move. Now, a classic double top sets up, obviously, like you see right here, with a test of a high, followed by a pullback to a higher low, and then a retest to that high. So this is a classic symmetrical double top. We have price symmetry here, and we have time symmetry. If we took the center of this, we see the exact number of candles going to the retest on the right side as we saw on the failure and the pullback right here to the middle. Now when we have double tops present, you can visually see these in the chart in any time frame. What I always teach is to look left right here, because structure leaves clues. Okay, this structure right here again is a visual representation for you, the trader, of what other traders in this market are thinking. So when we see a double top high, we see price rejection, price rejection. The sellers came into the market. The market pulled back here, and here we see price support. This is where they bid it back up. And when we see these two things present, then you can look left and see a low to low trend line present, followed by a third test to add confirmation. And now this is going to set up an ascending wedge. Now for us, we're looking for a failure pattern because of the double tops. Okay, so this is an aggressive sell. We call this a kiss of death sell. KOD is the acronym that we use. Now the second step in the kiss of death sell, after the double top has been put in, or the triple top, which you see right here, now we want to see a failure of the low to low trend line. So right here is where the market fails, and now it takes out the low to low trend line extension. Okay, and then I call this held trades. I want to see that the market actually holds trades below that area. And again, regardless of the time frame, regardless of the market, these held trades can represent a confirmation now and a setup for a trading signal. Okay, so we start with the double top. The double top, we look left to a low to low to low trend line. We look for the extension on that trend line, and then in the second chart we see that the market participants sold it enough to break that structure support. Now what we're looking for here for the signal is a rally back into the point of confluence where that horizontal structure resistance meets this low to low trend line extension. That's the short entry right there. Now as I go to the next one, this is part of the manual that we use in the course. I pull into the next slide, you'll see that the market has done just that. Now again, it's retained some of its structure. You see that we've broken this higher low when the market pulls back to here. This prior higher low is still intact. So you take the highs of the double tops and then employ what I call the number rounding strategy, have limit order sells resting, and then typically the stop is a 1-to-1 risk profile, stop versus the target. To identify the target, take the swing lows right here that produces the sideways channel, and this is the base of the channel. This is the swing high and the resistance. So as the market pulls back, the target one would be 587.50s, and you can see here the short entries are around 589, thus it's about 1.5 points of risk versus 1.5 points of reward. That's a 1-to-1 ratio. Move into the next slide. You'll see the market pulls back after the test at 589.30s. It pulls back to 88. Okay, so didn't quite get the 1.5 target. Rallies back into 89.50 right here, and now in the darker black solid line, I've shown you another low-to-low trend line extension. So they're still maintaining a bit of that bullish sentiment here, but again, the bears are coming in and defending the 589.30 to 589.50. A break below this low-to-low trend line is going to pay the scalping contract, and then obviously look for the trading contract, the second of a two-contract trade, as the market moves lower. And then on this final slide right here, you'll see even after the fourth test, the market finally does give way. The bears take over. The market presses down into 587.50. That pays $150 in the mini Russell 2000 contract. And at this point, as soon as the scalping contract target is hit, traders are taught to cancel and then replace protective stops. The market presses now down into 586.30s and right now moves back into a sideways trade. So, visual price patterns. Now we'll look at one more thing, and we'll look about the trading psychology. It's imperative that you can manage your trading state. So in order to pick this pattern up, it requires you move through the 4 levels of competence. And these are very basic levels of competence that go across any skill that you would pick up or learn. Obviously, trading in and of itself is a skill. So regardless if you're talking about a golf swing, playing tennis, you're talking about your current position, if you were to go out and start a new job tomorrow, you're going to start out typically at unconscious incompetence. You don't know that you don't know. I call this stage ignorance is bliss. Very quickly we move to conscious incompetence. Now we know that we don't know. We know there's a lot of information. And for traders, normally that's where traders get stuck. We try to go back out. We try to read more information about the technicals. We look at more stuff for indicators. Typically it's a futile effort because, again, it's about managing your trading state. If we finally do get to a point where we see a trading signal that makes sense, we invest the time to go through repetitions and start to learn that particular pattern or that particular signal, like this ascending wedge or like the double bottoms or the head and shoulders that I'll teach in an upcoming video. Then, through repetitions, you can achieve that final level, which is unconscious competence. Traders, hear me when I say this. It's imperative that you get to a point with your trading state mentally where you can literally, no differently than if you're driving down the road, you've got the cell phone in one ear, you got your hand on the steering wheel, okay? And literally, out of the corner of your eye, you see the light go from green to yellow, and automatically your foot goes from the accelerator to the brake. That's your subconscious mind. Your subconscious mind is what's controlling your heartbeat right now, your breathing patterns. You don't have to think about that. That's how you got to get your trading. You got to get your trading to the point where when you see this particular pattern, it has meaning. You have a belief about the value of that pattern. More importantly, you have a neuroassociation attached to what action you take when that pattern presents itself. And the only way you arrive there is through consistent repetitions. So keep that in mind as we continue through the series. Ascending wedge pattern right here after a double top, a beautiful kiss of death cell. We'll look at the inverted version of this, which would be a kiss of life long entry. And then we'll do some more pattern analysis and some more teaching on patterns and how to take your trading from where it is to where you want it to be. Until then, trade what you see.
If you feel the preceding video was a valuable tool to you, we'd like to encourage you to go deeper by visiting our website at thetradingauthority.com. Click on the free live room trial button to receive over 2 hours of exclusive trading psychology videos and 1 entire week of live coaching and mentoring with master trader Todd Brown as he demonstrates his exclusive dynamic structured trading system live. Simply fill in your name and email address and wait for the logon instructions to arrive. Don't wait to take control of your trading education. Take advantage of this free offer now.